So it looks like Kotak Mahindra Bank had its board meeting, huh? They've released their financial results for the quarter and 9 months ending December 31st, 2024.
Yeah, that's right. Actually, it seems like quite a comprehensive report covering both consolidated and standalone numbers. It's a lot to take in. So, where should we even start?
Maybe with the big picture? What about their overall profit?
Okay, so the consolidated profit after tax for the quarter was 4,701 crore rupees, which is a 10% jump compared to the same quarter last year. I mean, that's pretty solid growth right there. And for the 9 months, it's 17,193.23 crore rupees, which is also up thanks to some one-time gains from selling off their general insurance stake.
Okay, so that KGI sale really boosted their numbers then, huh?
Yeah, it seems like it. That sale contributed a net gain of 3,803.40 crore rupees before tax. The thing is, though, KGI isn't a subsidiary anymore. They're now an associate company after that divestment.
Gotcha. And what about just the bank's performance without all the subsidiaries?
All right. So the standalone profit after tax for the quarter is 3,305 crore rupees, also up by 10% year on year. For the 9 months, though, it's 10,168 crore rupees, only a 5% increase. It seems like the bank's core operations are doing well, just not as much growth there comparatively.
Okay, so the subsidiaries are really pulling their weight. How do those compare?
Well, let's see. Kotak Securities saw a 46% jump in profit after tax, while Kotak AMC, that's their asset management company, is up a whopping 73%. I mean, they're doing great, those subsidiaries. The capital company is up 170%. That's insane, right?
Wow, those are some impressive figures, especially the 170% jump. I mean, what about their lending side?
Okay, so customer assets for the bank, which includes loans and credit substitutes, grew by 15% year on year, reaching 4,59,436 crore rupees. And their advances alone grew by 16%. So they're definitely lending more.
Right, so growth across the board. I guess the big question is what's driving all this?
Well, their net interest income, that's the difference between what they earn from lending and what they pay on deposits, increased by 10% year on year. And for 9 months ending, it is also up 10%. So they're making more money on their core banking business. Their net interest margin for the quarter was 4.93%.
Okay, so they're earning more on loans and deposits. What else?
Well, fees and services also went up 10% for the quarter and 15% for the 9 months. So that means they are doing well in financial advisory, commissions, all that stuff.
All right, so they are not just relying on interest income, they've diversified revenue streams. Makes sense.
Exactly. And their operating profit also saw a good jump, 13% for the quarter and 10% for the 9 months. I mean, things are going really well, it seems.
Yeah, it does look pretty solid. What about their asset quality? I'm always curious about bad loans.
All right. So their gross non-performing assets, the bad loans, are at 1.50% of gross advances, which is down from 1.73% at the end of last year. The net non-performing assets is at 0.41%, which is also lower than before. So they are managing their credit quality fairly well.
That's good. So it's not just growth, but controlled growth, right?
Right. And their provision coverage ratio, that's the money they set aside to cover potential losses from bad loans, is at 73%. So it's like they're prepared for potential bumps.
And okay, makes sense. And what about deposits? Are people putting more money into Kotak?
Yes, average total deposits grew by 15% year on year for the quarter. Current deposits were up 12%. Savings were up slightly, but term deposits really shot up by 24%. So they're getting a lot more money through term deposits.
Okay, so they are attracting more long-term deposits. What does that mean for the bank?
Well, term deposits are generally considered more stable. So they provide a solid funding base for their lending activities. And it's a good sign that people have confidence in the bank, right?
Yeah, definitely. What about their capital adequacy? That's important for a bank's health.
Their capital adequacy ratio, which is like their cushion against risk, is 22.8%. And their CET1 ratio, which measures core capital, is 21.7%. Both are way above the regulatory requirements. So they're solid on that front too.
All right. So they've got enough capital to absorb any losses and keep operating. Seems like a very well-managed bank.
Yeah, and another thing I noticed is that their book value per share is 769 rupees at the end of December, a pretty big jump from 627 rupees last year. I mean, that means the value of the bank's shares have increased considerably.
That's a significant increase. It's like they're telling investors, hey, we're growing and becoming more valuable, right?
Exactly. It's a good sign for their investors. And they also mentioned their average liquidity coverage ratio is 132%. That means they have plenty of high quality assets that they can convert into cash quickly if needed.
Right, liquidity is crucial, so they can handle unexpected cash demands too. It seems like they've got all the bases covered.
Yeah, and they've also highlighted some key subsidiary milestones like Kotak Mahindra Capital being ranked number one in equity capital markets for the third year running. They're definitely a strong player.
So basically, all their business lines seem to be performing well. What else stood out to you?
Well, they're really focusing on their digital banking initiatives. They've been onboarding new customers through online and mobile channels, and they've also launched a new mobile banking app. It's like they're future proofing themselves,
Yeah, digital is the name of the game these days. Everyone's going that way, so it's good to see Kotak is on it.
Absolutely. And they're also working on their core banking systems, cybersecurity, and digital payments framework. It seems like the RBI had some concerns and they're addressing them.
Right, they need to be on top of that. So it's like they're not just focusing on growth, but also strengthening their infrastructure.
Exactly. And they are improving how they do things internally, automating customer journeys and digitizing transactions. It's like making themselves more efficient.
It sounds like they're really looking to scale up, not just grow for the sake of it.
Yeah, and their customer base has grown with more than 5.2 crore customers now compared to 4.8 crore last year. They're definitely expanding their reach. They've got a wide branch network across India, a huge ATM footprint, and overseas offices too.
They seem to be everywhere. What about their leadership? Any changes there?
Well, they have a pretty experienced leadership team, with most of them having been with the group for a long time. I mean, you see some of them have 30 plus years of experience with Kotak, which is quite impressive. It's like a well-oiled machine.
Right, so they've got a good, solid team to steer the ship. So overall, it seems like a pretty positive report for Kotak.
Yeah, actually, it does. They are growing, managing their risks well, and seem to be focusing on long-term sustainability. I mean, it's like they've got a clear vision for the future.
So what are your thoughts on their strategy going forward?
Well, it seems like their strategy is to drive inclusive growth and scale their business by focusing on their customers, technology, and empowered colleagues. It's like they're trying to build a sustainable, responsible business.
Well, it sounds like they're on the right track. And for our listeners, if you're enjoying this breakdown, don't forget to like, share, and subscribe to our YouTube channel for more insights like this.
Yeah, that's right. And something else that's interesting is their approach to different customer segments. It is like they've got specific propositions for each one, whether it's high net worth individuals, public sector entities, or the unbanked.
It's a holistic approach. They're not just targeting one specific demographic.
Exactly. And the way they organize their businesses with segments for lending, asset management, and capital markets is like it all aligns with their customer base. It makes sense.
All right. So it's a well thought out structure to cater to their different clients. So what's the bottom line here? What's your takeaway?
Well, I think that Kotak is a very well-managed institution that is focused on long-term growth and has a diverse business strategy. It seems like they have laid the groundwork for future success.
Agreed. It's a good mix of financial performance and strategic thinking, right?
Yeah, they're not just making profits, they're also trying to create lasting value and expand their reach. And, they're really trying to make a difference, it seems.
Definitely. It's not just about the numbers, but what they represent. They're building for the future, right?
Yeah, and I think their focus on technology will be key for their success going forward. They are investing in digital platforms and improving customer experience.
Right. Staying up to date is essential. It's a fast-moving industry, right?
Exactly. And I think that with all these initiatives, they're really transforming for scale. And, it will be interesting to see how it all plays out in the next few quarters.
Definitely. Well, that's a pretty deep dive into Kotak's results. Anything else to add before we wrap up?
I guess just that, these results give a really good view of where the bank is headed. It's like a preview of the future, isn't it?
Yeah, and for the investors and customers, it's a confidence booster too, right?
Absolutely. And it will be interesting to see how the market reacts to this and what their next steps are. I guess we'll just have to keep watching.
Right, indeed. Well, that's it for this analysis. Thanks for breaking it all down.
You got it. Always a pleasure. And until next time, folks, keep those financial engines running.